Welcome to Momentum Monday. Today, September 6, 2020. Howard, wearing purple, the royal color. Can you tell us a little bit more about your put option trade in Tesla? Like, why did you make it? What happened?
I'm just didn't want to short the market. If we pull up the Tesla,
Yes, I will.
I was talking to a lot of trader friends, and it just felt like, and I was a couple days early, which really didn't listen to my friends who were options traders, but they were kind of feeling the week after the options were announced, like the week after the options actually hit. So like Monday or Tuesday would be a good trade in Tesla. I went in on Friday with a couple puts. I had to endure, I think, a day of pain, scary. So it's just kind of like a little speculative trade with defined downside on the puts. I was going to give it a couple days and risk about 30, 40 grand. And it was a good trade. I covered it almost at the lows. I think I covered it on Twitter and StockTwits at the lows at around 380. I don't know. I mean, listen, the market, I have to say, like, the market did what it should do, right? Like it trapped a lot of people chasing the Tesla split. And it's resting right where it just needs to, right? It was just getting silly. There is no valuation that makes sense right now, but I think go back to the key driving factor here, Ivan, is just money printing, global money supply, and low interest rates. I talked to a lot of smart friends who don't like to comment on the market, and CEOs of public companies, and we talk about this stuff offline. And the number one comment is, where am I going to put my money? And it's sloppy to hear really smart people saying that. But at the same time, and then we found out SoftBank's been buying, NASDAQ calls in size, I don't know, for weeks. But there's a lot of forces at work that just are more important than fundamentals right now. And I think the biggest one that I've been talking about for weeks is supply, right? Until the market solves this with supply of good companies, new companies, cloud-based companies, more of what China's doing, like these behemoth conglomerates, but outside of, Apple, Facebook, and in China, Alibaba, Tencent. We're seeing so many with PDD and with Billy. We're seeing so many more big Chinese companies than American internet companies. So until we solve this with supply, the NASDAQ can go much higher. And so this pullback in QQQ that you're seeing here, Ivan, is, it's a good pause that refresh. So now we have to see where relative strength is. So now you take it away. Give me your thought.
So, by the way, supply and demand are the biggest fundamentals. And you're very right when you say that there's kind of no alternative to stock right now.
No. And then, Ivan, take it further. Do you want to buy Goldman, or do you want to buy a Chinese internet stock? And people are voting. They'd rather speculate in SPACs than own Goldman and JP Morgan. Because if you look at JP Morgan, look at it. I mean, can't get a bid. It's starting to finally get a little bit of a bid, but
yeah, financials are starting to kind of build bases, but
yeah,
there's still it could be a long bottoming process.
I personally think, Ivan, it's just a pause on the refresh to irrelevance.
It could be. It very much could be. So you mentioned SoftBank. They're in the headlines that they bought $4 billion worth of NASDAQ NASDAQ stocks, call options, or just call spreads. But even that number is dwarfed by what the retail traders are doing. Because they say the retail traders bought 40 billion worth of call option, call premium just in the past month. Yes, many people are underestimating the impact of retail traders as individuals, but together as a mass, they might have bigger impact than many big hedge funds. And as you know, the way the market works, when let's say you buy a call option of Amazon, then a market maker who is selling that call option to you, they need to immediately hedge their bet. So they're selling you the call option, but at the same time, they're buying the underlying stock.
Right.
Let's say you buy, Amazon call option that is right at the money. So its delta is 50, which means that for each dollar move in the underlying stock, your call option will move by 50 cents. So when that market maker sells you that call option at the money, they need to buy 50 shares of Amazon. So when you have millions of retail traders buying call options, the market makers need to hedge their bets. Like they need to buy the underlying stock. And this is why we saw this huge, actually the VIX was rising while the S&P and the Nasdaq 100 were rising, which is something that we haven't seen since the 90s. And this is the reason, because when the market makers need to hedge their bets, they need to ask for higher and higher premium to justify their risk. And this is why we saw that huge spike in implied volatility. And at some point, Apple's implied volatility was like 60%, which is something that we typically see when there is a 30%
panic
market correction.
And that was another reason I was, that the traders were telling me, and listen, I don't like buying puts or trading as a rule against the trend, but the VIX was another reason. The premiums were going up as the market went up, so it was worth to me trying it. So like even on the Tesla puts, even though the stock worked against me that one day, Monday or Friday, I wasn't losing money. It was just bizarre. And so it gave me a little more confidence to hold on to the trade for a couple more days, and it paid off. So, and now who knows, like, stock could be headed back to 200 and still be in an uptrend. That's, to me, what's fascinating is that you could see a 60% pullback and the stock would be in an uptrend. And you could probably see a 30% pullback and NASDAQ still be in a good uptrend from the March lows. So.
Yeah, I mean,
so you have to keep that in perspective. You need to position size here accordingly, because I don't think you see a replay of March. We're not closing down the economy. The elections are going to happen. They may be disputed. Well, they probably will be disputed at this point. But it's almost like we're priced in a dispute, and we haven't priced in. What we haven't priced in is just like a normal transition of power, and obviously, with a smooth transition, maybe that leads to, if Biden wins, that leads to a rise in interest rates and a decline in the market. Yeah. But I just think you have to keep it simple. I'm staying very light. Keeping my alpha high in the stocks that I own, like very high beta stocks. Keeping the beta high, but. I was able to add, even though I'm not super bullish because of the prices, I was able to add on Friday, Elastic and, and Fetch and some of the stocks that I like because I'm light, right now. And I was selling the last 2 weeks. So I added some Spotify on Friday and Elastic. And Spotify actually doesn't look that good. It needs to hold here. And then I think the big news on Friday was Google, government going after Google. And, the stock was just finally showing some strength. And so I'm tempted on another weekday here to test, some Google for a trade. But it gave back too easily, that breakout that it was trying so hard to get. So there's some mixed signals, but I think if you look at interest rates and money supply, people are going to buy the dips right now. They're not scared of anything.
Definitely, it could be just a quick rug pull or wake up call, because you're correct. Money supply has exploded this year. Interest rates are zero, and they have no intentions to really raise them anytime soon. And at the same time, the supply is still not what it was in the late 90s. We're not really seeing that.
We're not close. We're not close.
Or SPACs, for that matter. There's the occasional secondary offering, but it's just a drop in a bucket.
Yeah.
Compared to how much money is out there, and considering how little many bonds are yielding or savings account are yielding. So I would not be surprised if last week's correct 10% correction basically is just a ripple. Obviously, many momentum stocks that have just gone crazy, more than 1,000% or so this year, are likely to experience 50 to 80% corrections, and Overstock is already down 50%. So it always happens to in any time period, in any market. Many momentum stocks just retrace 50 to 80% of their upside moves, and some of them, I think they're just going to drop 10, 20%, and they're just going to build new bases, but it'll take time for them to set up. So it's interesting to see if
there's some good pullbacks, but I mean, what run? They basically just, a lot of these growth stocks just gave back a month of gain, month and a half of gains. But that's still a lot of gains to get back in dollar amounts.
Yeah, I mean, it's just a parabolic move. Like we have melt up and then down. The question is, where do we deep buyers?
I mean, the question is, if would I trade this at 210, 220? I probably would be tempted, very tempted. But looks like some kind of short-term bottom is trying to form off that relentless up move. So all in all, like, I think the damage that was done was just the options people, taking off the crazy options trades and
structural reason,
a structure reason. Very interesting. What else are you looking at? Did the biotechs hold?
The biotech continues to be one of the weakest sector, and I mean, obviously, 100 is a big level here, and there might be political reasons now with the election disputes coming up. People don't really want to have too much exposure to that sector with all the healthcare debate. And stuff. But definitely, you're right that on Friday we saw quite a few reversal candles.
And a lot of breakouts that stopped. Solar, I was like playing the week one for solar. I got stopped out of that. FSLR.
Solar.
So a lot of the stuff that was late breaking out just didn't hold its breakouts,
It's interesting, on Friday and also Thursday, we kind of saw relative strength in the laggards, in the lagging industries like airlines, outlets, even your favorite SPG.
I wouldn't call it strength, but I'm tempted to look at that here at 70.
They tried to break out on Friday. I actually traded them on Friday for like a quick dollar something, like a quick trade, because I saw that breakout. I mean, the market was down like 4% and they were breaking out.
So I think this is, like I said, we have to look at the banks. In any further weakness, I mean, I'm not surprised by the weakness in tech. That's just profit taking and a little bit of fear showing up in options expiry. Some covering, but these are the ones that I got on my screen right now: Boeing, Simon Property, and some of the financials, to see if they break down. If the market breaks down, we are in real trouble. Like, you have to look at the weak ones to really see how serious this sell-off is. Same with small caps, right? They were the weakest on the way up. And I kind of want to watch them to make sure.
Exactly. I mean, they kind of held here, the 50-day.
They held. But look how easy they tipped. You know what I mean? Like the NASDAQ, it makes sense, to take some profit. These need to hold because these have lagged. And we got to see the rotation into these. So it's an important week. And there's a lot of earnings, right? A lot of high flyers have earnings. Restoration has earnings. Lulu has earnings.
Exactly. Quite a few earnings this week as well. But so far, the market reaction has been just super favorable to all types of earnings.
I thought the Zoom thing, I was selling some, I thought the Zoom, explosion, the question was it going to hold and then base up there? And we can see what happened. It quickly, is not quickly, it's still 370. It's still up $70 from its earnings announcement, even with the NASDAQ pullback. But you can see that some people were selling that breakout. You know what I mean? And, if that gives back up the 300 price quickly, I may have to go on the defensive. So I'm looking, I'm trying to piece together, synthesize, this. I can't get nervous because of global monetary supply and interest rates. And you can't hurt Trump, right? So it's like the market's pricing in the fact that he has a good chance of holding his presidency, which, at many levels sounds crazy, but it's hard to beat an incumbent, even with the recession. or what, how badly he's handled COVID. So I'm, you know, I'm just not really changing my, you know, I'm bullish. The price action's still good. I'm watching the laggards to see if they hold in any more weakness. And I'm still, like with Spotify and Elastic and some of my favorite names, looking at weakness. Google's the one that kind of is a little bit nerve-wracking, and it kind of also proves that this administration, if you are their enemy, they will do anything and everything. And, you know, this is on a Friday dump to go after Google. So we'll see. You know, any other stuff you're looking at, Ivan?
I mean, as I said, I saw relative strength in a lot of the lagging industries towards the end of the week, and many of them are kind of setting up for potential breakouts. So I'll be kind of looking at them. So two things. So the laggards, they're setting up for a breakout, like, you know, airlines and department stores. There might be a quick swing in them. And the other thing is just there's so many reversal candles in tech stocks on Friday. If we see some form of continuation, or like if they clear their Friday's high, or, you know, I would rather see like a tight range candle like Monday, Tuesday, just to define my risk better. And then I would buy a break above that tight range. Because typically those reversal candles are bullish signals in an uptrend.
Okay.
But if this is a beginning of a deeper correction, which, I mean, as bullish as I am, I think it's a possibility with elections coming up, we might see that a bigger rug pull. You know,
but you have some candles to trade against here if you're a trader and you want to enter some new positions.
The lows from Friday getting, if the prices go below the lows from Friday, that would be a very bearish sign.
Yeah, and Tesla, I think, I don't know if it's true, but they're getting pulled from the S&P 500. Was there any truth to that? Did you see?
I haven't heard anything.
Yeah, that Etsy took their spot in the S&P 500.
Well, that would be
so that would be an interesting Tuesday opening. The Tesla, we'll just see what happens to Tesla. I think that'll be the story on Tuesday.
Yeah.
And then, you know, quickly, I think as we're seeing what I've been saying for a while, the crypto trades with the NASDAQ more than anything, and Bitcoin just got hammered. Bids got pulled as tech got hammered. So as much as I like to say Bitcoin's like gold, I don't think technically this is still a buy the dip, not a buy the strength type of asset until it decouples from NASDAQ. You know, it just seems when there's a flight from software, there's a flight from crypto. So that's it for me. Ivan, have a great trip to LA. When are you coming home?
Monday.
The heat wave's bad, huh?
It is bad, but it is what it is. You know.
It is what it is. You sound like Trump. Okay, my man, have a good Sunday, and talk to you next week.
Yes.
Cheers.